Ladies and gentlemen, HITI Stock is all about the green. Oh, I didn't mean that kind of green. I meant this kind. And they certainly do a great job of producing cold, hard cash. Despite what I think are good financial and operational results in the last earnings report, the stock has taken a bit of a backslide in share price. This is interesting to me because it seems that the business keeps capturing more market share, getting better, growing, and producing more revenue and ultimately will produce a lot more cash, yet the share price is down. From their investor presentation, now all of these figures should be in Canadian dollars because it is a Canadian based company. You'll have to do the currency conversion yourself or look up a different data feed if you want American dollars. Anyways, some things to note. One is the adjusted EBITDA trends upwards. Now, the consecutive quarters, it didn't. However, Q2 is generally one of the most sluggish economic quarters in all of Canada, and it was expected not to be as good as it was, actually, for high tide. Prior to earnings, I talked with some people that know the economic situation in Canada a little better, and they told me don't expect great things in Q2. However, it was pretty good. Also, if you look at net income, it actually is in the positives. Another interesting note is that their liquidity seems to be increasing over time. You notice their cash and equivalents back in 2022 at the start of this period that they've outlined here was about 18 billion, and it grew to 34.5 billion by Q2 2024. That's pretty close to doubling. High Tide achieved $9.4 million of positive free cash flow in the second quarter, 22.7 million in the past 4 quarters, and a trailing 12-month yield of over 8% compared with their enterprise value. The company generated positive net income of 0.2 million. And remember, GAAP net income does include everything like depreciation and whatnot, paper losses and that kind of thing. With that being an improvement from negative 1.6 million compared to the prior year same quarter, and break even with the sequential quarter where they basically broke even the last quarter as well. That cash flow is really what's driving this thing's value, in my opinion. They also remain the highest revenue Canadian cannabis company, or company reporting in Canadian dollars is how they put it. And it looks like they reached trailing 12 months revenue exceeding 500 million Canadian for the first time. And regarding club members and subscriptions, they have more than 1.43 million members of the Cabana Club, which is an increase of 38% year over year and 8% over the last sequential quarter. And the company has surpassed 44,000 elite members, an increase of 226%. And I think these memberships pretty much, you could say, represent the dedicated customers that spend money with the company on a regular basis. So to see those numbers going up means that their number of core customers, I guess you could call it, is increasing. I sort of view this as, like, say, if Sam's Club, Walmart, or Costco increase their membership numbers by a substantial amount, or Netflix or some other subscription service increase their subscriber count or whatnot. That's how I kind of view these numbers. This, to me, is a bit of a reflection of the fact that the consumer is probably very highly satisfied with what they're getting, and they believe that they're receiving a good amount of value from High Tide for the money that they're spending, which is why you would see these club member numbers increasing. One thing I really respect about this business is that they combine operational success with cost discipline and fiscal responsibility. We have salaries, wages, and benefits representing 12.4% of revenue, which stayed steady year over year. And they have managed to decrease the general and admin expenses from 5.2% year over year to 4.5% year over year. I can't tell you how many times I've seen the financials of a company that maybe has a good product, loyal customers, but their general selling and admin costs are just through the roof, and they don't keep them under control, and it prevents them from being able to return any value to shareholders. High Tide closely controls those costs and doesn't fall into that trap like so many other companies. Now, I do also like the fact that they outline that their net income was positive only by 200,000 Canadian dollars, but they make sure to specify that it included a non-cash impact of $7.5 million worth of depreciation. And that number makes up the majority of the difference between their net income and free cash flow. But for a smaller cap company like this that's still in its growth stage, I think the free cash flow number is more important, because not burning cash is what lets a business like this survive and then thrive. If you're interested in more High Tide discussion, we're having a High Tide roundtable Saturday, July 6th, 8 p.m. Eastern on the Cashflow Kings Live YouTube channel, link in the description. Make sure you like and subscribe to my channel, and join me on Discord, link in the description, if you want to have more discussions about stocks like High Tide, which I am invested in. And make sure that you always, always keep it crispy. Ladies and gentlemen, take it easy.